All right, so you're intrigued by Alphabet stock, huh? Even with the market doing so well, you think there might be more to this company than meets the eye.
Yeah, that's often where the most exciting opportunities lie. The companies everyone thinks they've got figured out.
Exactly. And this Motley Fool article we're diving into today, it starts off by saying that Alphabet is actually kind of cheap.
Yeah, which is interesting, right? Because we all know Alphabet, it's one of the Magnificent Seven, the giants. But when you look at their price-to-earnings ratio, it's actually the lowest out of all of them.
Really? Lower than Apple, even Microsoft, all of them?
All of them. And it gets even more interesting because their PE ratio is even lower than the average company in the S&P 500.
So for those of us who need a refresher, can you remind us what exactly is the PE ratio and why does it matter so much, especially when the market is doing as well as it is right now?
Sure, so the PE ratio, it basically tells us how much investors are willing to pay for each dollar of a company's earnings. So a really high PE ratio usually means investors are expecting big growth in the future. And a lower PE ratio, well, sometimes that can be a sign that a company might be undervalued, especially in a market like we're seeing now where things are at all-time highs. You'd expect those PE ratios to be pretty high across the board. So to see Alphabet with a PE of just 26.8.
Compared to over 30 for the other companies in the Magnificent Seven?
Exactly. It definitely makes you stop and think.
But wouldn't a low PE ratio also mean that the market isn't as optimistic about Alphabet's future growth?
That's a good question, but you also have to consider that Alphabet's future PE ratio, based on what analysts are projecting for their earnings, that's actually even lower at 22.5.
Which is even lower than the S&P 500's future PE of 24.3.
Right. So it seems like analysts are actually expecting some pretty decent earnings growth from Alphabet.
So maybe the market isn't fully appreciating their earning potential.
It's possible. And don't forget, Alphabet also has a massive pile of cash just sitting there.
How much are we talking?
About $93 billion.
Wow.
That's like 4% of their market cap. That gives them a lot of flexibility.
Yeah, it's a nice cushion to have. You know what else has always interested me about Alphabet? Their other bets.
Ah, yes. Their venture capital arm, always experimenting.
Yeah, it's true that those other bets are losing money right now,
Forgot.
but some of those ventures could be huge in the future.
Absolutely. It's like they're planting seeds that could grow into entirely new businesses.
Right, like a hidden treasure chest waiting to be unlocked. Okay, so reason number one, Alphabet might be a lot cheaper than we think, even more so than it seems at first glance. What's reason number two?
Well, this one's really interesting, especially with all the headlines about artificial intelligence. Some investors are worried that these new AI startups, they could be a threat to Google search.
Yeah, that makes sense. Will people stop Googling things and start using something else?
Well, you have to think about how ingrained Google search is. I mean, we literally use it as a verb. Google it. It's everywhere.
That's true. But what about Alphabet's own AI? Are they falling behind?
Not at all. Actually, they've been pioneers in AI for years. I mean, think about their DeepMind and Google Brain divisions.
They were doing AI before it was cool.
Exactly. And they were responsible for developing transformer technology.
Okay, so what is transformer technology and why is it so important?
So transformer technology, it's a type of neural network architecture that's been a game changer for how AI models process language. It's the basis for a lot of the AI breakthroughs we're seeing now, like ChatGPT.
So ChatGPT might get all the attention, but Alphabet's been laying the foundation this whole time.
Exactly. And they haven't been sitting still. They came out with their own powerful large language model, Gemini 2.0.
I've heard good things about that. And I also really like how they're using AI to make their existing products better, like Google Search.
Oh, yeah. Like those AI summaries you see in the search results now.
Exactly. They're making Google Search smarter and more helpful.
And keeping people within their ecosystem.
And it's working, because even with all the new competition, Google Search grew by 12.2% last quarter.
Which is pretty impressive.
Yeah.
And here's another thing. Alphabet has a big advantage when it comes to AI, because they make their own AI chips.
So they don't have to rely on those expensive NVIDIA GPUs.
Right. Their AI development costs are probably way lower than a lot of these startups.
So they're leading in AI, and they're doing it efficiently. That's a powerful combination.
Okay, so we've talked about Alphabet's surprisingly low valuation and their strength in the world of AI. What's the next reason to be excited about this company? You mentioned that Google Cloud has been growing like crazy. What's the story there? It seems like it's always in the shadow of search and YouTube.
Yeah, it does get less attention. But things are changing. I mean, Google Cloud, it's actually the third largest cloud infrastructure provider right now.
Wow, really?
Yeah, and it's growing fast. Revenue was up 35% last quarter.
35%?
Yeah.
That's huge, especially when you consider how big Amazon Web Services and Microsoft Azure already are.
Hmm.
Why is Google Cloud growing so quickly? Well, they have a few things going for them. First, they're really good at data analytics and artificial intelligence. And as more companies are trying to use AI, Google Cloud is a good option because it's easy to integrate those tools.
So it's not just about having a lot of computing power. It's about giving companies the tools they need to do more with their data.
Exactly. And they're also really focused on working with companies in different industries to make sure they're meeting their specific needs. Plus, Google has a huge global network, so their cloud services are really reliable and fast.
It sounds like they're doing a lot of things, right? And it's pretty amazing when you think about the fact that Google Cloud was actually losing money just a couple years ago.
Yeah, but they've turned it around in a big way. They're on track to have a profit run rate of $8 billion.
Hold on, a profit run rate? What does that even mean?
Basically, it means that if you take their current quarterly profit and multiply it by 4, that's how much profit they're expected to make for the entire year.
Oh, okay. So it's a way of looking at how profitable a company is right now. Okay. So Google Cloud is growing really fast, and it's becoming profitable. How does that impact Alphabet overall?
Well, Google Cloud is about 7% of their operating profit right now. But as more and more businesses move to the cloud, that number is only going to go up.
So it makes Alphabet less reliant on advertising.
Right. It diversifies their business and makes them more resilient.
Makes sense. So that's reason number 3. Google Cloud is on a roll. What's the 4th reason we should be paying attention to Alphabet?
This one might surprise you. It's Waymo.
Waymo. They're a self-driving car company.
Oh, one and only.
It feels like they've been working on that forever. It was one of those other bets projects, right?
It was.
Yeah.
They started back in 2009.
Mm.
And for a long time, it seemed like it was just a dream.
But 2024 was a big year for them.
It was. They expanded in San Francisco, and they launched a full public service in Los Angeles.
No way.
Yeah. And they're actually doing really well. In San Francisco, they're even competing with Lyft in terms of market share.
Really? I had no idea.
Yeah. And they're not slowing down. They've already announced plans to launch in Austin and Atlanta in 2025, Miami in 2026. And they're even testing in Tokyo.
Wow, Waymo is going global. And it seems like they're quietly building a self-driving empire while everyone's focused on Tesla. Why do you think Waymo doesn't get as much attention?
That's a good question. I think maybe it's because they've been really focused on safety and reliability, and they haven't been as loud about their progress as some other companies.
But they're getting results. While Tesla's still working on their robotaxi service, Waymo is already out there picking up passengers.
Exactly. And it makes you wonder if maybe Waymo is being undervalued, especially when you compare it to Tesla.
Interesting. Okay. So we've got 4 reasons to be excited about Alphabet. A surprisingly low valuation, a leading position in the world of AI, the rapid growth of Google Cloud, and the under-the-radar success of Waymo. It's a pretty impressive company.
It is. And what's really fascinating is that even though Alphabet is this giant company, it still feels like there's so much more to come.
Makes you wonder if everyone's so focused on the shiny new AI companies that they're missing the bigger picture.
And that brings us to a really interesting question. We've talked about how other bets are kind of dragging down Alphabet's earnings right now. But what if Waymo is a sign of what's to come?
What do you mean?
What if those experimental projects actually end up being huge for Alphabet?
Like Waymo went from a crazy idea to a real business.
Right. And it's already competing with Lyft. What if some of those other bets turn into something big too? Could those be the key to unlocking even more value for Alphabet?
It's definitely something to think about. It seems like the market is always focused on what's happening right now. The latest earnings report, the newest trends.
But Alphabet has always been about the long game. They're not afraid to invest in the future, even if it takes time to pay off.
So for anyone listening who's interested in Alphabet, what should they take away from all of this?
I think it's important to look beyond the hype. Don't just focus on the AI stuff or the headlines.
Take a step back and look at the bigger picture.
Remember what we talked about with other bets? Waymo is already happening. What if some of those other projects end up changing the world?
What if they create entirely new markets that don't even exist yet?
Alphabet might be the biggest hidden gem out there.
Even though they're already one of the biggest companies in the world?
Right. They have a really strong core business. They've always been innovative. And they're not afraid to invest in the future.
It's pretty remarkable. Well, this has been a fascinating deep dive into the world of Alphabet. Hopefully everyone listening has a better understanding of what makes this company so interesting.
Absolutely.
And as always, do your own research. Think about your investment goals and your risk tolerance before making any decisions.
Couldn't have said it better myself.
Thanks for joining us. And until next time, happy investing.